All right, what's up, Tycoons? Super excited for today's video. We're going to be taking a look at Upstart Holdings, okay? Ticker symbol UPST. And this video was a viewer request. So if you have any stocks you want me to chart up for you, give you some technical analysis, a breakdown, feel free to do that in the comments below and also get specific. That really helps me out a lot and giving you a better video of what you really want. And they requested the Bollinger Bands in this video. So I will be throwing on the Bollinger Bands and showing you that. But before we do that, we're just going to begin. We're looking at, I have the 4-year, 1-day chart pulled up. So each ticker is pulled up here. It represents a day in the stock in time. All right. And this company's only been around for like 3 years, 3 years, something like that. So we're seeing the entire lifespan of the stock. Okay. It initially, started off at 22.61. That is our bottom. All right. And our high, our all-time high for this is 401.49. All right. Now, these lines here are what's known as the Fibonacci retracements. Okay. Essentially, what you do is you have your swing low and your swing high, and this is going to tell you the levels where it can bounce at, for it to be a bullish cycle, okay, to stay in a bullish uptrend. So if we would have bounced here around the 23.6 line on the Fibonacci's, that would have been what's known as a strong uptrend, right? If we would have bounced in this area, but we didn't, okay? So we broke that level. And then we have this level here. This is where you would, if we pull back and retrace to this level, then this is an area where you'll see a normal uptrend, right? Not very strong uptrend, but a normal healthy uptrend, right? And below there, you have your 50%, okay? And this is where, you're essentially going to see retracement and it start to go on the downtrend, right? This is 50% of the lows and the highs right here. Okay, at 212.05, and you break below there, and then you have your bearish price targets and where the support and resistance levels below that. All right. To where it may recover or where it can give you an indication of where the price may head to, right? So once we break below here, you can see, okay, well, it's coming to the 61.8% fib, which is 167.34. All right, we know that it's in a downtrend now, so now we know that the trend is going to most likely take us down to this next level here, 103.69. And if we continue at this level, in this bearishness, we're gonna come back down to the 22.61. And if we look right here, we came really, really close to testing it. And we were able to find some support just above it. So that's what we have drawn up. And then we also have gaps. Okay, gaps are super important. Gaps fill in the stock market 90 to 95% of the time on the daily chart. It's just a matter of if, or not so much a matter of if, but more of a matter of when, right? You can lose a lot of money trying to time the market. Okay. And what I mean by that is if you would have been here on this day when this gap happened and you saw we gapped up really big and you charted your gap and you set alerts and you were waiting for it to come down and fill, well, you would have, been waiting a very, very, very long time. Let's see how many days it was before this gap started to fill. 404 days. So over a year, you would have waited, right? If you're trying to time the market because, oh, well, gaps fill 90 to 95% of the time. So I'm going to time the market, right? And what do you know? The stock continues to rally, okay, 392% before eventually falling, okay, down, 72% from the initial gap up 418 days later, right? So, you have to keep that in mind. Here's another gap right here, okay? We gapped up again, and, those gaps fill, but it's just a matter of when, right? If there's gaps down, those are going to fill in a bear market cycle, right? Because if the stock is going up, it's in a bull market cycle, okay, and the gaps down are going to fill in bear market cycles. Well, as we've started our very dramatic fall down, if we look at from the highs to here, down so much, okay, just insane. Now we're starting to get gaps up to fill, okay, so these gaps have filled. We can go ahead and erase these now, remove those drawings, okay. And now we just have to be patient, okay, and wait because now's the pain. All right, so we know that there's a gap up to fill all the way to 308. So using that info that we have, that gaps fill 90 to 95% of the time, right? We're going to say, all right, well, there's about a 90% chance that this gap is going to fill in the next bull market cycle. right? So your first question is, are we in a bull market cycle? Well, the answer to that is no, right? So you can't expect any quick returns on this, right? And then you have to look at some of the fundamentals of the company, and you have to look, because the 5 to 10% of gaps that don't fill, that don't ever fill, right? They happen because of certain scenarios, right? If a company is going bankrupt, and that, or let's say a company fails, or is no longer around, right? How is a gap up on that chart going to fill? So you have to, before making any investment decisions, you have to really dive in a little bit more and research more truly about the company and some of the fundamentals, before just blindly throwing money at gaps, right? I think the best thing to do is set alert on gaps, so that way you can be present for, day trade or swing trade opportunities, once we get to the levels of interest near the gap, right? But if we look at now at where it's at currently, okay, to the first gap up to fill, all right, that's got a 77% return, right? So we went over in the beginning that, it's not so much a matter of if the gaps are going to fill, it's a matter of when the gaps are going to fill. And we saw that when the market started to gap up initially, it took over a year for these gaps, for the gaps down to fill that we had here and here, right? So you got to think to yourself, is it possible that it may take over a year, or at least a year, for this gap to fill? So if you're thinking of it with that in mind, let's say you have some money, let's say you've started investing, done some research, and you're very bullish for some reason on Upstart. Well, you can start to look at it and look at your first gap down, right? Because your first gap down is much lower than your highest gap up, right? So you can set some realistic expectations, and you can say, all right, well, over the next year, maybe I'll start a position here at $44, because I know that, if Upstart in the next 5 years, there should be another bull market cycle within the next 5 years, right? Then I can at least hold it to here to till Upstart is at $76, and I'll get a 72% return. And you can slowly start to average in your position the lower that Upstart goes, right? It's at 44 now. Let's say you put 10% of your position in, right? And you know that it's going to take at least a year for it to fill, possibly 5 years or more. So you're in no rush, right? You got your starter position. Maybe wait till it goes down to 25, right? Hey, well, now it's at 25. All right. Let me look at it from 25 up to here. Up to there would be a 200% return, right? So you don't want to throw all your money into it if you're trying to play the gaps right away, when it's near the gap, because, the returns are going to be smaller. But if you wait, until we come down lower, possibly to the 2261, because to me, it looks like many stocks are looking to try to create new lows, right? Especially, things that aren't blue chips, right? Those are creating lower lows, like 52-week lows maybe, but they're not really creating all-time lows. A lot of these newer stocks that have been around in the past 5 years, I think that they are on the path to make all-time lows, and rather than just 52-week lows. So that's something to really keep in mind. Okay. Now, we're also going to go over the major support levels here. Okay. And you can see I have the support levels drawn all the way up through here. And we're using that same strategy to get these support levels as we are down here. We're just using it on a more defined, time level, right? So that way it's a little bit clearer for you guys, because this is where it's currently trading at. We know that there's a gap up to fill. So essentially we would have an alert down here for when the gap is to fill, right? So until then, we're going to be paying attention to all of this area in here, right? From $0 to $50.88. That's our main area of interest for accumulation for the gap fills up. And it's up to you to decide what price levels is right for your taste. Okay. So we're going to go ahead and go to studies, and we're going to throw on the Bollinger Bands now. And I'm going to give you a tutorial of how to do that. And it's really quick. Okay. You just come over here, BOLLI, hit Bollinger Bands, hit add selected, and then you can go over here to the settings and modify it. What I like to do is I like to change the colors, okay, just to like this light gray color. And you change your midline, your lower band, and your upper band, okay? And it's going to look like that. You hit apply, and boom, now we have the Bollinger Bands on the chart, okay? So we're looking at the daily chart with the Bollinger Bands on it, all right? And we have our major support and resistance levels, all right? So the first thing I want to show you guys is that we are trading currently right, in the bottom half of the Bollinger Bands. Okay, so this is our middle, this is our top, this is our bottom. What this means is that the price generally, when you're trading below it, is going to go like this. It's going to go to the bottom, okay, then to the top, and to the bottom, and to the top, and it's going to trade in between those levels there on the bottom half. So it gives you an idea. Besides, if you don't have these support and resistance levels, it gives you an idea of where the stock is going to start to bottom out at, okay, and where the stock is going to start to top out at. All right, because we do have these levels here charted up, which feel free to screenshot and try to grab those levels, and chart them up on your own. And so we can look here around $63 is a valid resistance level. Okay, and then right now currently around 1989, right around this support level here of 20.6 is going to be our support for the Bollinger Bands. Okay, so we could continue an uptrend and it may try to fill this gap, right? Because now if we go to our other chart, we can look at the gaps and we know that, all right, well, there's a gap above 55 right here. So we're going to have an alert already set. So essentially, if we come in through here and break this bullish support level, okay, at 50.88 or resistance level, then we're going to know that we're heading towards the gap. And we can look at our Bollinger Band now and say, okay, well, maybe while we are filling the gap, where am I going to find resistance at in the gap? You can use your middle Bollinger Band and say, okay, well, if we do start an uptrend, it may get rejected here before coming back down and potentially filling the rest. Okay. So that's where we're at with the Bollinger Bands and the support level right now on the daily chart. If we zoom out to the weekly chart, we zoom out to the weekly chart here. Okay. It'll kind of give us a bigger picture overall and kind of just see that, all right, well, we're definitely starting a downtrend. Okay. The Bollinger Bands are starting to squeeze now, and tighten up. Okay. So if you look at what happened, we had this crazy bull market and it just blew the Bollinger Bands up. That's what the Bollinger Bands do. They expand reacting to the price and then they compress reacting to the price. All right. So when the price starts trading outside of the Bollinger Bands, it means it's super bullish. We're in a super bull market cycle. And then it pulls back down into the middle Bollinger Band because that's what they're going to do. They're going to try to snap it back in like a rubber band, okay, and squeeze it back in like it has done here. So you see it's tight, kind of tight around here. It expands and then it squeezes back in. So when it squeezes back in, that's when the stock is going to be moving in less dramatic, momentum. If we look here, what was that? That was 85 days, 265%. I mean, just crazy. You know what I mean? And then we come back down, we find support a little bit right around the bottom Bollinger Band. We bounce and then we continue just heading lower, right? And the Bollinger Bands are real skewed because of that heavy price action there. But we've started a downtrend now. So that's brought them all the way back down. And so we're now starting to squeeze on them. Okay. So what I think is going to happen is we're just going to continue squeezing on these. And we're going to head in a direction like this. Okay. We're just going to keep heading in a direction like this with the Bollinger Bands. And they're going to keep heading towards this, area. Okay. And we're going to look and we're going to see the price action, fall below, bounce up, get rejected around the Bollinger Band here. Okay. Then we'll see it fall back down, get rejected around the Bollinger Band here. It may break past it, right, and come up. But this top Bollinger Band is going to be our area where we're going to see some resistance and then come back down. And I just see a downtrend continuing on UPST, at least for the rest of 2022, possibly into 2023. /ES and the SPY, that's the S&P 500 tickers and the futures. They really don't look too good. And it looks like, we could have a bear market that's going to last anywhere from, 6 months to a year, 2 years, 3 years. So you have to keep that in mind, right? If the overall market is in a bearish market cycle, now may not be the time to be looking for gains. Okay. We're not going to see a lot of short-term gains in today's market. What we are going to see is a lot of long-term gains. All right. And I'm going to show you how. We're going to go back and we're going to look at the gaps. Okay. So we're looking at the gaps in the Bollinger Bands now. We're looking at our Fibonacci levels. We're knowing that, okay, we came down past the 50% level and we're heading down. most likely we're going to come back down to 2261, even though we have gaps up to fill. Okay. Unless we start a bullish market reversal and we just keep going up after this point, keep going up and keep going up, keep going up, keep going up. The trend is your friend, right? And the trend, this is the past year on the stock. You can see it's just been brutal, very, very brutal, from 401 down to $44, down to lows of 25. So it's been very brutal. That trend is going to continue. Okay. And you can see it a little bit more clearly on the Bollinger Bands here. We're riding the bottom Bollinger Bands. Okay. That's what's going to continue to happen. It's going to try to bounce at these, and then it's going to face some resistance around the middle Bollinger Band. We're going to come down. It's going to bounce. All right. And, I'll just zoom in a little bit more so you guys can see, but that's essentially what is going to continue happening with this stock. I think we're going to continue to trade in the bottom half of the Bollinger Bands. And there'll be a few market cycles where it's going to break past the middle Bollinger Band, okay, and head to the top Bollinger Band. And I think that that's a good area to look at, either like possibly shorting, okay, and getting some short positions on UPST. Because for right now, any bullish momentum is really just a dead cat bounce. You know what I mean? I mean, if you fall, look here, we from here to here, we fell a bunch. All right, what was that? What's that percentage? 70%. Oh my gosh. Yeah. So 70%. And then we have a bounce, okay, of 100%. And what is that? That's nothing but just a dead cat bounce, because then we drop further again. And after that 100% rally, we drop another 80%. So, I mean, keep that in mind. Use the Bollinger Bands to help you and figure out, some support and resistance levels that you can look at yourself and see that you like. All right, because it's really good. It's going to give you an idea. So when it's squeezing, that's when you can expect it to pop. And it popped really hard off of earnings. It came outside the Bollinger Bands. All right, and once you see that, you know that the Bollinger Bands over time are going to snap it back in towards the middle Bollinger Band. And sure enough, that's what happened. Okay. It stayed out of them for 3 days here, faced some resistance at the Bollinger Band, and then the next day opened inside of it and went straight up to the middle. So, that's pretty much where we're at. Okay. And, that's my overall take on UPST. I think that, it's going to create new all-time lows within 2022. And, I think that there are some really great investment opportunities. If we look here around 22, let's just call it $24. Okay. Offers about 200% returns to the first gap up to around 75. And then, to the final gap up that I showed you guys is over 1000%. So yeah, remember, it's going to take years probably, right? I wouldn't expect it to happen very quickly, but when it comes to buying things on sale and on a discount, why not take, a chance with something that's 90% off if you are bullish on this, right? No financial advice, because, I'm not personally invested in this. I don't own shares. I may day trade it or swing trade it, things like that. But I have no emotional attachment to this. So thank you guys for watching. If you made it this far, I have some really good tutorials on the Fibonacci's. If you're a little confused on how to use the Fibonacci's, I got a video on gaps, okay, on what they are and just showing you, over time how they fill. And then I also got a video on the Bollinger Bands. Okay, so feel free to watch any of those if you need a little bit more info and detail on some of the strategies and indicators that I used in this video.